September 18th, and I want to talk a little bit about. We hear about the cash out refinance boom that's happening right now. I wanted to provide our lender partners with some data on who the most likely borrowers are for cash out programs, as well as some trends on the long term financial health and the impact of these cash out refinance bars in the portfolio in general for lenders to consider. I especially want to talk about it's timely because I know the GSEs are, I don't know if they fully rolled out the programs, but they're definitely considering purchasing securities for second lien loans. So I thought it was timely to talk about, and especially after TMC and talking about the next generation buyer. Before I start reporting data, I just want to share a little bit about our experience working with a diversity of borrowers in terms of ages, income, racial backgrounds, educational backgrounds, the amount of debt to income issues they may have, and share some of our learnings. First and foremost, I think there's a lot of studies and a lot of information on what borrowers need to do to get mortgage ready. And there's not as much of a focus on what happens to borrowers or what are borrowers' responses in denial, in a mortgage denial. Borrowers may get some kind of soft verbal denial, or a loan officer may never call them back, and they get an adverse action letter that attempts to explain in legalese why they're denied. And, as the generations change, and I would say younger people who, I don't want to generalize and say they're less resilient, but if they're not used to receiving denials and we set up our educational systems to accept, right? We're all about safe environments, accept, include people. Then getting a denial can be really hard, and for a lot of people that may mean they just don't come back and try for another 5 to 10 years. So, how do we as lenders think about if we have to deny somebody, who are borrowers that have a low number of items they have to tackle from a financial planning and health perspective that can get them approved sooner rather than later? And we should make sure to deliver some insights to those borrowers and check back in with them, because that can be a lead in the funnel in 3 to 6 months from now, right? In this market, every loan matters. Every borrower that comes through the door matters, right? So I just wanted to talk a little bit about that, because if there's ways to, people don't want to think about denials, they think about lost loans, but at the same day, that could be part of our funnel in 3 to 6 months from now. So not to forget about those borrowers. There may be just a few things they need to do to get mortgage ready. A huge reason for denial right now is insufficient income. When rates were low, less than 40% of borrowers would have insufficient income. Now, Black and Hispanic borrowers, it's over 50%. Asians, 45% have insufficient income, and white borrowers have around 40%. So just to keep that in mind, that insufficient income is a reason now more than ever for denial, and their income required to buy a house is much higher right now. So LoanSense, obviously, we aim to boost affordability by reducing debt to income, and we're helping address some of those issues. But I just share this insight because there are ways to capture this information, and then maybe there's a system to rate every borrower based on how far they are to being mortgage ready. What are the actions and action plans? It can be part of a loan officer's follow-up that does, again, produce their pipeline in the 3, 6, 9, 2-year mark, right? It depends how much that borrower has to prep, but there may be ways to rate borrower by the level of work that they need to prepare to be homeowner ready, and a subsequent follow-up can be made. And that's a way to make sure we're not losing loans in the pipeline. So I wanted to share that a little, but then I also want to share my insights after reading a CFPB study on cash out refinance borrowers. So it's a key component in the market right now because people want to leverage the equity that has grown in their home, right? Since home prices are going up, people's equity have grown, and people want to tap into it more than ever before. So, um, I want to talk a little bit about who is more likely to take a cash out offer. Borrowers tend that are taking cash out offers right now tend to be middle-aged, higher income earners, who have owned their homes long enough to build significant equity. That's an obvious, but also who aims to consolidate debt or finance home improvements. Recent data indicates that minority borrowers, particularly Black and Hispanic homeowners, are more likely to tap into home equity as a source of liquidity compared to other groups of borrowers. They use the funds for essential purposes like home repairs, managing debt, and managing different financial pressures that come in their lives. While cash out refinance offers liquidity, there also are risks involved, and I want to talk a little bit about this, especially in the rising rate environment. Borrowers may face obviously higher monthly payments. If their home values do decline at all, then that can lead obviously to over leveraging, and over leveraging may make people end up in a more financially vulnerable position if they end up with a mortgage that is significantly more than what they can rent for, and they're having financial struggles with a high payment. They may end up in a defaulting on their home, right? On their ability to pay. So I just want to put that out from a portfolio perspective, that over leveraging is a potential risk for specific types of borrowers. Understanding, obviously, as leaders in the mortgage industry, understanding these demographics is crucial, but also it can help us better target refinancing options to meet borrowers' needs. Again, if they have student loan debt that can be forgiven, they should not roll their student loan debt necessarily into a cash out refinance offer. If it's a federal student loan, if it's a private student loan with adjustable high interest rates, that may be a whole nother thing. But I always tell people to be cautious, because your home is where your roof, right? You need a roof over your head. And if you're rolling in debt that you could possibly negotiate down with specific private student loan refinance companies, you probably don't want to roll that into a cash out refinance, right? Using the funds to pay down your student loan debt may not be the best use of funds. So I think understanding what borrowers' needs are and almost acting as that advisor to help them best manage that cash out. I know that's not a lender's focus, but I think that could be very valuable to helping a lender's portfolio mitigate the risk of default, and offering personal guidance that builds up that customer base that brings them back again and again, right? I know that lenders who give a lot of education, provide insight that goes above and beyond, will get that business again. They will be remembered, and will get referrals, right? Especially if you're giving advice or information on topics and things that Americans struggle with the most, which we find very often is, obviously budgeting. I feel like budgeting is a hugely bad word. I always say I like giving every dollar a job, right? In your monthly budget, giving every dollar a job. That may be a bad word, but I do think borrowers really that we work with, and we've worked really hard to increase pull-through rates of borrowers we work with. It's really important with borrowers, especially to address a plan on how to get mortgage ready, or information on how to best use cash out refinance money. Borrowers like to have someone with a little more experience offer plans. Even if they don't follow through, it still highlights and shows your expertise as a mortgage lender. So I just want to share some of those pro tips. Of course, at LoanSense, we have all kinds of content, direct-to-consumer webinars, ways to guide and provide expertise specifically to student loan borrowers. But I did want to highlight some of the data and information around who this cash out refinance borrower is, along with the psychological impacts of getting turned down, and building rather a plan and a scorecard to rank borrowers by these are just 2 or 3 actions they need to take to get mortgage ready. This person has more than 5 actions to take. This person has between 2 to 5. Rank those borrowers and have a way to follow up with them in the future will help generate business in the near future as well, because it's not only about getting the deals today, but it's about managing our pipeline for deals in the future as well. I hope my content has been useful. Please follow me if you haven't on LinkedIn. If this is posted elsewhere, please like, subscribe, and comment.